There are really 7 reasons why one must invest in sovereign gold bonds. That's what we're going to talk about today. The 7 reasons why one needs to look at sovereign gold bonds are: you get a guaranteed 2.5% interest payable to you on a year-on-year basis. The investment is free from any capital gains. So the gain that you make in gold prices by investing in sovereign gold bonds is free from any capital gain tax. Third, you do not have any physical asset to store. Therefore, you are not worried about storing this. There is no making charge. There is no losses relating to that. So to that extent, you save much more money on this since it's a digital form. Fourth, it is easily liquidable because it is listed on the stock markets, and if you have it in your demat account, you can just sell it at the prevailing price and exit at any given point in time. You can place it as a collateral and thereby take a loan against this without actually disturbing your investment. Sixth, there is no GST or any other costs attached to it. So to that extent, your money will buy more gold. And last but not the least, since you're buying it digital, on the price of gold, you get an advantage of 50 rupees per gram that the government offers you as a discount for investing in digital gold. So these are the 7 distinct reasons why one must invest in sovereign gold bonds. But before that, let's understand the basics of why one needs to invest in gold at all. Over the last 1 year, gold has been among the highest return yielding investments among equity, debt and gold. So really, gold has been a stellar performer given the uncertainties around the Russia-Ukraine war, the high inflation rates across the globe and many other uncertainties that we live among. So gold is clearly a great investment that one needs to have as a hedge to one's investment in other places like equity and debt. Having said that, the options for physical gold and digital gold are very many. The physical gold is something that you wear as a jewelry or an accessory to go out to meet at special occasions. But it has a problem. Storage is a big problem. There is a problem of theft and pilferage if you keep gold in a physical form. Plus, making of physical gold jewelry has its own hassles. There are making charges, there are wastages and a lot of it, almost accounting for 20-25% of the overall cost of gold. So that's a huge loss that one bears. But if you're looking at investing in gold only for investment purposes, then digital gold, the sovereign gold bond, is a great option that one must consider. Now let's understand what sovereign gold bonds is. Sovereign gold bond is an investment offered by the government of India in terms of allowing citizens to buy gold and hold it in non-physical form. Now the sovereign gold bonds issue come for around 5 days, once in 3 months on predetermined dates. We had one recently in June. The next one will come up in the month of September for 5 days. Now the price of this bond will be nothing but the average of the last 3 days prices the week preceding the day of when the bond issue opens. So it's really a very transparent process of pricing, and when somebody buys it in the digital form, in the demat form, he also gets a price advantage of 50 rupees discount to the actual price because government wants to promote this as an option. Now how much can one buy? You need to buy in units of at least 1 gram, and the max you can buy in one financial year is 4 kilos per individual pan, which means that you can buy in lots of 1 grams every single issue so long as it doesn't cross 4 kgs in a given year. Now the advantage of buying this sovereign gold bond is it's guaranteed by the sovereign in terms of repayment when it completes its tenure. The tenure of this bond is 8 years, which means that at the end of 8 years, At the prevailing gold price, then the government will pay you back the investment in rupees into your bank account. How many grams of gold you had bought, you will get that day's price for that many grams credited into your bank account. Now, should you require earlier liquidity, sovereign gold bonds offers liquidity after the 5th year. Anytime you can surrender the investment. In fact, from the day you bought it, and if you're holding it as a demat unit, you can go into the stock market and sell it, because it's also available as a listed item in the stock exchanges, so it's allowed to be traded. So you can sell it in the stock market. You can also transfer it to anybody that you know of, a friend or a family, and take consideration thereof, because it is available for you to transfer to any holder as well. So there are a variety of different ways you can deal with the sovereign guaranteed bonds. Like I said, it gives you 2.5% interest every year. That's an icing on the cake. And if at the end of 8th year you find that the price isn't suitable to you, you can afford to wait for 3 more years as well. You can carry it forth for till 11 years till you get the right price. Of course, the return is not guaranteed. It depends on the gold price at the time when you want to liquidate your investment. But given the past history, we do expect gold to continue to perform reasonably well over an 8-year period. That said, the advantage of sovereign gold bonds is that there is no GST or there is no making charge, there is no wastage. So for every 1 lakh rupees, you get that much more investment into gold as compared to buying it in physical form. So that's a great advantage. Second is, you also have no capital gain tax. So assuming you bought gold at 1 lakh and 8 years later you got 2.5 lakhs, traditional investments you are subject to capital gains tax, whereas on sovereign gold bonds there is no capital gains tax. So to that extent, the 1.5 lakhs of additional gain that you make will come to you absolutely free of tax. So it's a great advantage from that perspective as well. Now, how to buy it the best? I would recommend you have these gold bonds bought as units in your demat account. That way, you can afford to trade in them if you need the liquidity. They are held safe and they are much more secure than buying it as a unit and getting a statement at your home. So that would be my recommendation to you. Using these demat, you can also take a loan against keeping these units as collaterals. So that's another advantage. The third is, you need not liquidate all units. Your liquidation unit is 1 gram. So you may buy hundreds of grams, but when you need liquidity, you can sell only that many grams that you need money for. So to that extent, it's an extremely flexible product that one can deal with and hopefully kind of get returns. Gold as an investment is emerging as an interesting asset class which does not correlate with equity and debt. To that extent, it's a little different from both. And we would recommend you to look at sovereign gold bonds as one more asset in your asset allocation so that you benefit from it in the long term. However, like I mentioned, there is no guarantees that gold will give you a set of returns. It is subject to market risks. So you will need to do your due diligence. Having said that, the past history gives us enough inputs that gold does deliver reasonably good returns, not as high as equity, not as low as debt, somewhere in between is where it lies. So that's the story on sovereign gold bonds. We'd urge you to look at the next time that you have an option for and think of some investments there too.